Welcome back, ladies and gentlemen. Thank you all so much for taking the time to stop by to chat about the general market and review my day trades. We have NVIDIA earnings last night, which were really good, sending the market up, which was great. And then the job report came out this morning, which was actually decent, better than it should have been. Classic good news is bad news. And the reason why is the rate cut for December has dropped substantially because the market's too strong, right? The market is not weak enough to warrant another rate cut, which the market does not like. So it's de-risking across the board. We see global liquidity in massive outflow here today. Bitcoin down to 86, which is gosh darn incredible. And then we look at that on the 1 day. We had this bearish reversal pegged for quite some time and have been just riding this downtrend. Losing the 200 was significant, and then when we could not reclaim it, rejecting the 200 here, that's just the end, the nail in the coffin, if you will. Now the big question is, how far do we slip, right? And then the S&P, same situation, right? Not quite as bad, but what we have formed is a bearish market structure shift. If we cannot hold this sell side liquidity, I would look for support at some of these daily gaps, if not the 200, as it's going to catch up as well. And, maybe we have a relief rally into another drop, and that's going to give the 200 some time to catch up. And, if that 200 breaks down, then oh my gosh, look out. And furthermore, if it breaks down and rejects on the attempted reclaim, like we see on the Bitcoin chart here, then, buckle up. Things could be pretty pretty bad for an extended period of time. But aside from all of that, the market looks strong, right? So I think that a long term downtrend is not in the cards. If it's just better than it should have been, right? And everybody's hunting these rate cuts, and then when the Fed says we're not going to do it because the market looks too strong, then well, you know what? We're going to de-risk and we're going to make the market look not as strong, right? It's literally as simple as that. So that's just to get you up to date with what's going on. And then where did we leave you yesterday? SGBX, right? And this was a really nice play with some daily gaps to reclaim, which we did, right? Yesterday we broke into the gap, held the bottom band of it with a reversal signal. So really good entries here yesterday with a stop loss below that daily gap, and then just climbing it up to fill the gap, getting our 5-to-1 risk reward, easy peasy lemon squeezy. This continued to rip into close, and then even higher today, rejecting the lower band of our next daily gap, all the way up at 950 from our $4 ads, which is just incredible stuff here. And then OLMA, this was a potential day 3 inside bar that we're keeping an eye on, and did have a little bit of movement, but not quite enough, right? We're gonna have to wait and see. Maybe this afternoon this comes out with a little bit more volume, but we have our first day, a volumetric move, right? Nice big candle. Then day 2, low volume consolidation, ideally within the body of the candle, but if it's within the wick, we'll still keep it on watch and just keep an eye on it, right? Not every setup is perfect. Then today, if you can break above the upper wick, that's going to be great. And then the body and then the wick of day 1 to really send it for a true day 3 inside bar. But the market being so weak, I don't expect it. Okay. And then we have ONDS coming out saying that they got a $35 million strategic investment for Performance Drone Works, PDW, for production of the next generation of combat robotics. Now we have the other day Operation SS. Oh? I know, right? I can't believe they named it that. Southern Spear. So sorry. To combat the Venezuelan drug situation, I guess. Definitely nothing to do with oil, okay? But so we're taking a look at oil. We're taking a look at robotic companies, trying to build out that watch list. Not really getting into anything preemptively, but if there is volume that comes in, then we're going to know why that volume's coming in and can act a little bit more accordingly, right? And this is a good example. as to why you don't want to be preemptive on any of this, because yes, the news may seem nice, but that doesn't mean that there's a technical entry model here, and you're going to have to wait for one of those, which again is brought to you by certainly not sell volume, right? Which again, if the market was in a different situation, then maybe this also would have acted a little bit different. Today's quite unique considering we've had such a massive green to red sell-off on our indexes. So into our day trades, things that we're actually taking a look at today. MNDR was the main. This had some shares bought by an insider, which is pretty cool. And then just like, what a wicked candle this was. This is like a 300% candle from $2 all the way up to $6.36, which is absolutely obscene. Then we see it retrace, and we're like, okay, well, that's obviously got some room to move. We see it bounce off the 21 here into this bullish engulfing candle. We're going to take our entry there with our stop loss below, that first pullback candle, right? And then, scalp it up 1, 2, 3, 4, and that's going to be a gap fill on the daily, which is quite nice. We can just obviously zoom out, show you that. Maybe not. Whoa. That's one day. Here we go. So here we have our gap on the 1 day. This is a void or inefficiency in liquidity. It's the market maker's job to match buyers and sellers. Now, there's open orders here that they still want to interact with, and so they do, right? And then here we are off of that gap fill, right? Once these orders have been interacted with, there's no reason really to have it remain up here. We can kind of bring it back down to fair value, which is brutal, but that's the way of things, right? This is how things go, and that's why you're always protecting yourself, scaling out along the way, right? Really important. And then BNKK, which I didn't really like because it's a penny stock, but it is what it is, and sometimes the news is good enough to warrant a play. In this situation, it was. We've earnings reports. They're beating revenue by 1,200%, which is crazy, and then they've got $9 million chilling in cash, which is pretty good. And it was like about a 20 million cap company at the time, so a lot of room for it to go up when this news dropped. Getting in on it as early as we can on that retracement, probably a little preemptively, but just the news was pretty decent, and then setting our stop just below that first bar that popped up. Ideally, we should have waited and made sure that this trend tested first, right? And waited for the next candle to break above, but it was pretty slow this morning, and the news was really good, and we're combining that with a lower daily average, right? And then our current day volume is eclipsing that, right? Could have been lower, but not terrible. And then this was also a name change from SHOT, which is one of the things we like. We like name changes, OTC uplisters, right? As a few of the big ones, right? Post reverse split, another group of stocks that we like to play that act a little aggressively, right? And then that volumetric or parabolic move is what we always like to play. And they tend to drive volume for some reason. The OTC uplister, the name change, and the post reverse splits as well. So bonk was pretty cool, right? Not too shabby. We kind of had an uptrend that we were looking to see if we could hold into the morning, but we broke through that and had a reversal signal, and then lost the 200, and we're back where we're at. So again, this is why you need to scale out on all trades, right? Unless you're in on GameStop, and then just buy more, right? So that's all I really had for you guys today. It's a slower day, right? The Bitcoin is down 5.5% at this point. The market continues to drop, only down 1%, but it would be far more than that. Like if we look just at this bar here today, this is a 3.2% day on the chart. So that's very aggressive for an index, not something that you typically see, right? Like what was this? This was another 3% day, which is pretty terrible. And you can see just how rare they are. Like even this big drop, not all in one day. Like that's a multi-day for that 3%. So the fact that we are getting a couple of these moves is really aggressive. Let's see if this can hold, right? That last big down Let's see if that level can hold, and basically just tracking the sell side liquidity. But if we lose that, we've got these daily gaps in the 200 to target. But we're going to be waiting for a reversal signal now at this point, probably just on the 15 minutes, and then we'll work our way out to the 1 hour. But just not too like our time horizon for that is not close. Like that's probably weeks into the future at this point, and maybe even months potentially, depending on how this all plays out. So, stay safe out there, protect yourself, make sure you're managing your risks. If there's anything I can do to help, let me know in the comments below. Have yourselves a magical day. Thanks for taking the time to stop by. Leave a like, drop a comment, subscribe to the channel, and I will see you all tomorrow.